You can use your W-4 in a strategic manner and optimize it and make adjustments for it so that you still can get a refund, but you'll also have more cash in your monthly cash flow every month to use for yourself, for your family, for your dreams, for your plans, and not give it to the government. Welcome, welcome, welcome to The Tax Life. I am your host, Jeffrey White, 30-year tax professional, financial professional, 30-year veteran of The Tax Life. This week, we're going to be talking about the subject, how to avoid overpaying taxes. All right, and overpaying taxes, it's a relative term, and a lot of people don't really understand it. But I want to be transparent with you right now today. All right, and if you think you to get a big refund is a win, I'm here to tell you, in my opinion, it may not be such the windfall you think it is. Okay, now most people do believe that getting a big refund is a good thing. Okay, and here's the truth. The truth is that when you receive a refund, in a lot of cases, that refund is not free money. Okay, and there are three primary ways to get an overpayment. Okay, and they come in most cases in the way of a refund. All right, and this is my terminology, but there is the the free money. Okay, which comes by having certain financial circumstances. Okay, you may not make a whole lot of money, and you may be living as a single parent. You may be taking care of dependents, and then there are certain credits at certain income levels that you can um, qualify for, and then there's money that is provided to you as a subsidy in the way of a refund to help you to make sure that you and your family and your dependents are doing financially well enough. Okay, in a lot of cases, it's to try to keep American taxpayers, in some cases, above the poverty level. Okay, so I call that a circumstantial refund or a way of overpayment. Okay. Then there is the combo. My version. It's called the combo overpayment, which includes government money. Could be a lot of government money depending on the circumstances, and some of your own money that you have put into the system in the way of withholding taxes, and because you overpaid or miscalculated, you get that money back in the way of a refund. Okay, and the combo is partly government money and partly your money that you put into the system. Okay, and then the refund or the overpayment that I'm going to be talking about primarily in this lesson happens is what I call the pure refund. Okay, and this refund is a result of a taxpayer overpaying their tax bill and getting that money back in the form of a refund when tax season is upon us. Okay, and what that means, if you get a pure refund, what that means is that you have allowed the IRS in the case of that overpayment to have the use of your money interest free basically for about a year. Okay, and so the lesson tonight is about, it's not necessarily about cheating the system or trying to beat the system. Okay, and when we're talking about the system, we're talking about the tax system. But tonight's session is about learning how the system works, why we do overpay, and why I believe that overpaying is not a good thing. Okay, so if you want to start to live a smarter tax life, a more strategic tax life, give me a thumbs up. If you want to stop leaking dollars from your cash flow, then yeah, give me a thumbs up in the comments, and let's get to business, and let's get to seeing how we can stop the gap that is leaking your money to the government. Okay, so we talked a little bit about what an overpayment is, but basically, a pure overpayment is you pay your withholdings. Let's say you're an employee or even an employer that has a business, and in an employee standpoint, you have your money taken out on a federal level, and in some cases on a state level, every time you get paid. Okay, and you as the employee, you dictate that by way of a W-4 form, right? And in some cases, depending on your state, like where I am in Georgia, we have a G4 form for the state withholdings. But the amount of withholdings are dictated by the employee. Withholdings are actually voluntary, which a lot of taxpayers don't really even know. Okay, so let's talk about how overpayment actually happens. In a lot of cases, it happens without you even knowing how it happens. All right, there are five reasons, causes, ways, if you will, that I have identified that are the most prevalent reason why people overpay, and how they end up with this big refund that they consider a gift from the government, right? The first one, incorrect withholdings. Okay, so again, like I said before, your withholdings are by law, they're up to you, the taxpayer. Okay, and you have the flexibility to choose that by way of this form called the W-4. All right, and we're all familiar with it. If we've worked at some point in time in our lives, we filled out a W-4. Usually when you get that first packet, that employment packet that you get back in the day, you get it and you sit down in the office, maybe that first day or when you were first officially hired, and you filled it out and you wrote down, okay, I got this many dependents, this many exemptions, this many uh, people that live in my household that pay taxes and things like that, and you turn that in, and then that dictated how much was withheld from your pay when you're paid. Incorrect withholding is the top reason why people get the pure refund and overpay their taxes, okay? Especially when they have income changes after they've done their original W-4. Maybe they get a raise, maybe they have children. Those are one of the things that could change the amount of withholdings, or change your calculation at the end of the tax year, which would also be one of the reasons why you could end up overpaying and getting a bigger refund. So the number two reason that I've identified is, if you're a business owner, there is a lack of quarterly planning. Okay, now most businesses, especially if you're a profitable business, are supposed to actually do their version of withholding, and it's called estimated tax payments. And quarterly estimated tax payments are supposed to be sent in to the government to pay what your expected taxes would be once you reconcile and do your business taxes in, let's say, April or March. And most business owners that are out there, especially if you're a small business owner, a lot of them, they either don't do their estimated quarterly payments correctly, and they turn that money and send that money in, um, I don't know, without doing the proper strategic estimations, without forecasting, without looking at prior year documentation, and they send quarterly payments in, and a lot of times they end up sending more that results in an overpayment and getting a refund back. So they miscalculate their estimated tax payments on a quarterly basis, okay? And they don't adjust each quarter based on prior year or year-to-date information, all right? The next reason why people overpay is just missed deductions, all right? So if you're missing deductions, you don't track your mileage, you don't track your supplies that you buy, or you don't track properly your things like the home office deductions, then you're subject to have um, incorrect or miscalculated or even missed deductions. And that is another way that overpayment happens to taxpayers. Okay. One of the ones that I think is probably one of the most important ones, but overlooked, is what I call refund psychology. Okay. Now, refund psychology means that we taxpayers have been conditioned, okay, to feel safe about overpaying. And you feel safe about overpaying because you rather overpay, get a bigger refund versus underpay. Here's the thing about refund psychology. Refund psychology leans on the fact that the taxpayer is unintentional about their tax life. Okay, and it's just easier to say, okay, I'll send more money than I should because I don't want to take the time to do the calculation or plan quarterly or sit down and talk with a tax professional and get this thing right down to the penny. All right, and so that I could utilize more of my money instead of sending it to the government and then allowing them to use it and not pay me any interest on it. Okay. And then the fifth thing that I've identified that results in overpaying and why a lot of taxpayers overpay is called no strategy mindset. All right. And it is really on my spectrum, on my tax life spectrum, is really individuals that are proactive and they don't have the mindset of being, reactive. They don't have the mindset of being proactive. Okay. And so they don't have a strategic mindset. Therefore, they treat taxes like a chore and not a tool. Okay. And it's just easier to do and send more money and know that you're going to get it back, versus take the time to project and change the W-4 or G-4 and make the adjustments periodically so that you have more cash flow in your family, your household, and that cash flow allows you to use it and do the things that you want to do with it versus giving it to the government. And the government's not gonna do what we want. They're not gonna help us meet our dreams. Okay. So a statistic I want you to think about. In 2023, the average tax refund was around $2,800. Okay. And that means that millions and millions of taxpayers allowed the government to have an extra $250 per month of their money. Okay, too much of their money. All right. And I don't know about you, but I mean, I'm not even close to being that rich where I want to give the government extra $250 per month or $2,800 per year of my money and not get any interest or any bang for my buck or have any real say so in what happens to that $2,800. So if you have if anything I've just said has made you think, has caused an aha moment, okay, have made you say, you know what, um, I do like getting a refund because it feels like a gift, like Christmas or birthday. But the reality of the situation is that if I'm a pure refund receiver, that means I overpaid. I sent the government my money. They held on to it for a year or a year plus, depending on when you file. And when they give it back to me, they don't give me any interest on it in most cases, unless they've held it for a super longer time. Then they do actually give interest. But most refunds don't have any interest on it. 99% of them don't have any interest on the refund. So if you think that, hey, maybe you might want to make some changes and you might want to fix the leak of that money to the government and fix your tax flow and have it flow to you instead of be diverted to them, then this next things that we're going to talk about, this is what it's about. It's about aligning that change you want to make or that transformation you want to make, aligning it with your tax life. Okay. So what we have to do initially for this transformation to take place. And again, these tax life sessions are really about transformation. Okay. And it's about mindset and change and changing our thinking and our conditioning from I don't know the same old to the new way of doing things. Okay, and I don't care how old you are, a change of mindset, in my opinion, in your tax life could not necessarily only change your life, but can also change the life of those you love or the lives of others or your children or your children's children. Okay, so you got to align now your tax life with how not to let this cash flow leak out of your income stream. Okay, so we got to identify and do some things from a different level, and they're what I call identity-based habits, right? And identity-based habits will shift you from blindly letting the government hold your money for a year plus and then give it back to you without any interest. It'll shift your mindset and get you to start to do habits that will take you from the identity of a person that thinks overpayment is good or the refund is good to the person or the taxpayer that says, you know what, if I plan right, if I get some information, knowledge, and I start to implement these identity-based habits to take me from a tax filer to a tax planner, then I will have and be more aligned, and being intentional will give me a lot more flexibility. Okay. So first thing we want to do is go back to that number one reason why overpayment happens is we got to adjust our W-4s, folks. Okay. Straight up, point blank. In my practice, in my 30 plus years of being a tax professional, okay, mostly a tax preparer, okay, the number one thing I see is that um, taxpayers they goof around, they play around with that W-4. All right, someone very close to me initially when I first started working with them and doing their taxes would use that W-4 and play with it and use it and adjust it and go, well, I'm gonna do 6 months exempt on my tax withholdings, and then I'll go back to regular withholdings in that next 6 months. And invariably, that person did not go back in that second 6 months, and then ended up owing big taxes. Okay, at the end of the year. But in this particular case, you can use your W-4 in a strategic manner and optimize it and make adjustments for it so that you still can get a refund, but you'll also have more cash in your monthly cash flow every month to use for yourself, for your family, for your dreams, for your plans, and not give it to the government. Okay. So there is a tool that the IRS has, and I found this tool maybe about 4 years ago, and it's only maybe about 5 years old in this form, and it's called the W-4 tax withholding estimator, okay, or the IRS withholding estimator, or the W-4 withholding estimator. But the idea is that it's a great tool that I use every year, all the time, with clients, especially clients that have issues with their withholding. Okay, either they want to withhold less to have more cash flow in their pocket and in their household, or they need to withhold more so they don't owe taxes because they're being more than um, the calculation would allow, and they end up owing at the end of the year and during tax season. So great tool, different modules. You go through a series of questions and modules, and at the end of the tool in the last module, it will allow you to see what you need to withhold to pay your taxes to get a little refund or a bigger refund. And it even has a sliding scale that will allow you to adjust and get really, really close to the amount of withholdings that you want to take out. And it could, in this case, you can decrease your withholding to the point where you get just enough to pay your taxes, but you have access to more and more and more of your money throughout the year to utilize yourself. Okay. So you want to use that, and you want to use it as a tool and have that in your tax life toolkit. Okay. So if you're a business owner now and you are responsible for paying estimated taxes, okay, what you want to do is you want to make sure that you, if possible, use an automated quarterly payment of your estimated taxes, okay? And that you sit down with your bookkeeper or your accountant or your tax professional, and every quarter you look at, okay, what have we made? What did we make last quarter? What did we make this quarter last year? Okay, and you do some look back. But the idea is that you want to as accurately as you can calculate what your taxes are going to be at the end of the year, and then actually take that quarterly payment and send it to the government. But you don't want to be sending the quarterly payment too much. You don't want to be sending the government too much. And what that means is that you can't guess on the number, and you can't, if you want to be accurate and you want to get and keep. Okay, I run businesses, right? And the lifeblood of businesses is cash. Okay, and when businesses run short of cash, um, things come to a halt. Okay, you can't, without cash, can't pay payroll. Without cash, you can't pay your bills. So the idea is you want to keep cash flowing through your business at all times. Okay, so having accurate estimated taxes is really, really important, because you don't want to send them too much. And then let's say you send them too much in the first couple of quarters, Q2, Q1 and Q2, and then by Q4, you really, really tight because you didn't want to take the time to plan and to estimate and to accurately forecast and then send your quarterly payment. So you want to make sure that you take the time, even if you have to get someone to help you with it, but send accurate quarterly estimated payments. Okay. You also want to track everything year round without question. Okay. Um, Tracking gives you the ability to manage your cash flow, and you want to use tools that are out there. QuickBooks. Back in the day, we used to use QuickBooks Desktop. Okay, it was right there on your desktop locally. Okay, and then obviously when the internet came and things moved and advanced, the ability to have that same QuickBooks online, and the ability to even share. And now they have features that link the QuickBooks account directly to your bank account. Okay, these tools are really good for tracking things like Keeper Tax, even Google Docs, Google Sheets. Obviously, you can even do things like old school Excel. But the idea is that tracking is going to be better for you and will help you to avoid overpaying. Tracking things like your business meal, your cell phone costs, your mileage, obviously. Okay, continuing or training and education. Okay, we all use a lot of applications nowadays. Subscription-based applications are really, really popular, right? Track these applications to the penny, okay, in order to help you to forecast on a quarterly basis what your cash flow is going to be like, and to send accurate estimated tax payments to the government, okay? Alignment in your tax life doesn't mean you're going to lose dollars, okay? What it means is that you're going to forego having to have the guesswork, okay? Again, we're talking about transformation here, right? And We're talking about maybe going from a model that you as a taxpayer may have that's kind of laid back, easy going. I'll get to it when I get to it. Okay, tax time's coming around. We're talking about transformation from that to, hey, look, taxes affect so many areas of our life. You can't walk out the door without taxes hitting you. I just got gas today, and part of my $2.90 per gallon. I know that's crazy for some of you guys in other states, but it is that cost, and it's not bad. But part of that $2.90 went to taxes. All right, food taxes, sales taxes, gas taxes, utility taxes. Now we're not even talking about now IRS taxes, state taxes, local taxes, real estate taxes. I mean, what I'm trying to say is that we can't continue. Well, I'm gonna make it my mission to have the message that it's not prudent, it's not good stewardship to continue to lead your tax life in a laissez-faire kind of manner. Okay, we got to step up our game. We got to be intentional because we're leaving money on the table, and it's taking us longer to get to our dreams. Okay, so you guys know every session I talk about a mutable law or a principle that I like to bring up and put on your mind. So this session, and obviously all the principles that I talk about are framed in the context of taxes in your tax life, but these principles are immutable, which means they are unchanging, and they are built upon other principles, and they can be used in more areas of your life than just your tax life. But this session's principle is called the law of tax liquidity. All right. And the law of tax liquidity says the money you don't control can't grow. That's real simple. The money you don't control can't grow. So earlier I used the term cash flow, okay? And we all know what flow means, okay? And give you an example, your payment that you get, your paycheck flows from the income that your company makes into your paycheck, into your bank account, and it flows, and then you use that to live your life, right? As a tool to live your life. Um, but when you interrupt that flow, or in the case of withholdings being too much and going to the government, then there's a leak in that flow, poop, right? And so less is flowing to you. Okay, you see what I'm talking about, right? And in this case, less is not more, less is not better, less actually, in my opinion, hurts you. Okay, we want more cash flow coming in to us, okay, so that we can use that cash, that tool, to live our lives. And more cash is better. Point blank simple. Okay. It just gives you more opportunity, it gives you more flexibility, it gives you more credibility. Okay. So in this case, if you're letting money leak, you're not controlling it. So that's money that you could use to grow in some way. Is that making sense? Okay. Let me give you an analogy. All right. So overpaying taxes is like giving somebody a 12-month interest-free loan, okay? Except that wasn't your choice, okay? By default, it happened. Matter of fact, you didn't make a choice. Well, you know what? You did make a choice. You made a choice not to do anything, or you made a choice not to take the time and the effort to plan and strategize and to project and to get and keep that cash flow coming to you. Okay. And then even the person that borrowed the money from you didn't even help you to get to your goals. All right. So it was a win for them, and in my opinion, a loss for you, a loss for anybody that is a reactive um, taxpayer. Or you don't even have to be reactive. You got to be, in my opinion, in a lot of cases where we're unintentional. That's a word. Um, or we're casual. I like that word better. We're casual about our tax life. Anyway, so now strong alignment, okay, plugging that hole, or in my lingo, plugging that gap. I like to call it a gap. You plug that gap, okay. Now you got maximum flow, maximum liquidity. All right. You have more flexibility, okay. You got more cash flow, which means you have more opportunities, okay, and opportunities to do what you want to do with that tool. More flexibility, and you could even do things like reinvest it or grow it, which is what the law is about, okay? So the money you don't control, the money that seeps away from you, the money that you let the government have for a year or a year plus, tax free, you cannot use, you cannot grow it. Okay, simple as that, point blank. All right, so now when you want to make that transformation, okay, you got to implement it. You got to start some, well, again, what I call identity-based habits. Okay, there's some tools you got to put in place. There's some taxes. There's some must-dos to get this thing going, and um, to fill the gap, to change some things, change your mindset. Okay, it doesn't happen overnight. Most people, we are resistant to change. Okay, but most people, we know in a lot of cases that change is going to be the best for us. Now, whether we implement it, a whole nother story. But so what we did, and what you need to do, is if you want to put some of these tools in your tax life, okay, a couple of things, right? You got to have some monthly check-ins, all right? You got to have some body, okay, that you work with, okay? Or you can work with yourself. I mean, I could be straight with you. I could talk to you, right? Taxes, as and from a standpoint of preparation, okay, it's really about plugging in the numbers, okay. Now, tax strategy and tactical way of your taxes, totally different, and it's not for the weak, okay. But what I'm saying is that you have the ability to affect your tax life yourself, okay. And it starts with assessing where you're at, and then the mindset change. And you could do little things like, watch these sessions, right? You don't have to have a professional, is what I'm trying to say, to start having these monthly check-ins, okay. It could be just about, hey, let me look at my pay stub. Let me look at my withholdings on my pay stub. Am I on track for the number that we calculated on the W-4 tax estimator at the IRS website? See? Okay. You want to review that W-4 at least twice a year. Okay. You could do it yourself. Okay. We all know most cases that, having somebody to root us on, a lot of times, in most cases, it works, right? Um, I was in my best shape physically when I worked out with somebody, a team, or somebody else, coach, or just a buddy. Okay, and I've always done my best in a team environment. So what I'm saying is, if you don't feel like you have the capacity, then find somebody to help you. Join a group, a Facebook group like the Tax Life, right? Or something like that. But the idea is, if you don't feel like you do it, you don't have to go it alone. All right. Um, Talk to your tax professional. If your tax professional is just a tax preparer, then you may need to go to somebody else that knows a little bit more about strategy. Okay. But adjust your W-4, look at it periodically, a couple times a year. If you get a new job, and you go in and you change your W-4, make sure that it accurately reflects your real life situation, okay? And if you get raises, time to look at your W-4. If your family number changes, hey, baby number 2, the baby number 3 is on the way, all right, you need to look at that W-4, okay? Use some kind of tracking system, okay? I'm all into the digital tracking systems, okay? But the old school works, okay? Like I told you guys once before, I kept a detailed budget of everything I spent in a little bitty it just happened to be a black book, but not that kind of black book, right? But it was a black book and it was a ledger book, and everything I spent, I wrote down because I was saving for my first property, right? Um, 1 bedroom condo, Crenshaw Boulevard. What's up, Crenshaw? And everything I spent that year, I wrote it in that book, and that gave me the ability to know what I was spending, where it went, how much I was spending. I was singled in, so a lot of that was going to entertainment. And so, but it was really, really helpful, okay? And the idea is that you need to have some kind of tracking system that works for you, okay? It could be paper. It could be, I used to have a client that had that yellow canary legal notebook paper, and she's really, really good at it, okay? But it could be digital as well. I like digital. I don't know, just because it seems that it could once you learn it, it could be a little easier to move things around, transfer things, recall things. But anyway, um, again, Mile IQ, good for mileage, QuickBooks, Keeper Tax, Everlance, QuickBooks for self-employed. Okay, but have a tracking system. Stick with it and be consistent. Okay. Know your tax bracket. Okay, we talked about that in one of our earlier sessions. Okay, it's important to kind of know. Okay, and remember the lesson that just because your income goes up doesn't necessarily mean you're going to pay more in taxes or that you jump a bracket on your total income. Only the portion that goes above your last bracket is taxed. Okay, don't stress out, don't panic. In my opinion, obviously, unless it's a extenuating circumstances, making more money is always going to be a good thing. And you don't want to not make more money because you think you're going to pay more taxes. Okay. You make more money and then figure out how to not pay more taxes. Okay. That's how the equation works. All right. Know your effective tax rate. Okay. Your effective tax rate, I'm going to let you in on a little something. I didn't even know what the effective tax rate was for my first 3 years doing taxes at H. John Block, right? I didn't know. Okay. But your effective tax rate is really the actual amount of money that you pay in taxes based on the actual income that is your taxable income. All right. It's an equation, it's a division. Okay. And it comes out to a percentage. The tax brackets are a guide, but the effective tax rate is what you actually, you know, send to the government. Okay. Don't just look at getting a refund as a good thing. Okay, you want to make an informed decision. This lesson today, this session today, is about bringing to your mind what overpayment really is. Okay, now only you are going to make the decision whether you still want to get the fat refund and give the government your money for the whole year without interest payments. But my job, I'm the messenger. Okay, this is my purpose. This is my mission. This is my calling. Okay, it took a long time to figure it out, but I'm here using the gifts that God gave me to inform you. Okay, um, so don't just look at the refund and go, ooh, I got money. What does that refund represent? Okay, in a lot of cases, it represents that you overpaid. Okay, schedule a year-end strategy time. It could be with yourself. It could be with a professional, but don't wait until the last minute. Okay, schedule a strategy session. Okay, what do I want my tax life to look like? What do I want it to be? All right. Um, Early November, December. Okay, you start forecasting some of the deductions that you're going to take. Okay, if you're a business owner, you want to review your entity. Hey, LLC, single member LLC, multi-member LLC. Oh, maybe I need to look at being a S corporation, or even in some cases a C corporation. Okay, you want to be consistently reviewing and analyzing your tax life. All right, and what about what about if you're investing stocks? Okay, and you have the ability. There's a tactic and a strategy, but a tactic, you might be able to look at your what they call dogs in the stock world. You look at some of your dogs and say, hey, these things aren't coming up. Okay, I need to do and implement this tactic called tax loss harvesting, where you take some of your non-performing stocks and make sure you sell them before the end of the year, and then you can get um, that loss on the sale off of your taxes, bring down your taxable income, and now save on your tax. I mean, these are just things that you can do initially to avoid overpaying in taxes. All right. Now let's recap. Overpayment means you're misaligned in your tax life, and you're messing with your flow. All right. Smart strategy keeps the flow going. It keeps it liquid. It keeps you having the ability to be um, flexible and have control of your money, which will allow you to let it grow. Okay. Small shifts in your implementation, small shifts in your mindset, okay, and small identity-based habits, moving you down and through the spectrum from being a tax filer that's reactive to a proactive tax planner. Okay, this is what we got to do. Okay, if it's important to you. All right. Small changes on your W-4, better tracking can yield big results, big returns, can help you to get to your dreams faster. Okay, um, your tax life is really about designing and telling your money where to go, and telling your money what to do. Remember, money is a tool. Okay, and tools work based on the person that's handling them, right? Um, you swing a hammer, right? You screw a nail, okay? Without the person operating the tool, then the tool is just, it's really nothing but an object, okay? The money is the tool, and you're the person controlling the money in a lot of cases if you're intentional. If you do nothing, then the tool is just going to sit there, okay, or it's not going to grow. Let's do that. It's not going to grow, all right. But we want to move from guessing to projecting, all right. Again, overpayment um, of your taxes and getting this fat refund and feeling like, oh, it's Christmas time. Oh, his birthday, I got a good gift. Oh, you know what I'm saying? In my opinion, and in a lot of financial advisors' opinion, it's just not good stewardship. Okay, it's not about the math. It's about the mindset. It's about the momentum. Okay, money is only a well, I'm not gonna say only effective. It's most effective when it's moving, when it's circulating. Okay, you've heard terms like in circulation, certain dollars in circulation. Okay, moving. Okay, there is an energy in money. Okay, and then moving money. Okay, cash flow. It says cash flow. It don't say cash stop or cash sit or cash do nothing. It's got to flow. Okay, when you let that flow go, or when you have a leak, you're affecting yourself, in my opinion, negatively. And I hope that if you listen to this lesson, and maybe you need to listen to it again, is real truth in what I'm saying. Okay, and it's not conjecture. It's truth. Okay, so make your money work for you. Money's a tool. Keep the cash flow going. In my opinion, don't give anybody your money, and the use of your money, okay, without some kind of return on investment, all right, unless you're giving it away, all right, and you don't expect to get it back, because if you get it back, then you want some return on that investment or some return on that loan, and the government in most cases doesn't do that, all right. Don't just hand it over by default, okay, and say, oh, I'm just gonna wait until February and get my money back, okay. If it's government money and it's free money, hey, more power to you. Get as much of it as you can, okay. If you're a combo overpayer and some of it's the government and some of it's yours, okay, that means you got to do even more calculations and more projections, because you want more of theirs and you want less of yours, okay. And you want to make sure that you control the flow, okay, because like the principle says, okay, the money you don't control does not grow, okay, and good stewardship is about growing the money, okay. We don't have to go into the whole story about the talents. Y'all know what I'm talking about, all right. But if you got this tool that's given to you by the source, we're just a resource, okay, and that source wants us to take that money and grow it, okay. So I appreciate you guys listening to this lesson, watching this lesson. Tell somebody about this. I think we got good information. We got heartfelt information. This comes from somebody that has been living a tax life unbeknownst to me. I've been living a tax life longer than 30 years, okay? And by God's grace, I just started figuring it out a few years ago, and now I want to talk to you and tell it to as many people as I can. I want to affect your tax life and as many tax lives as I can, because taxes are all around us every day, everywhere we go, looking down, looking up, all around. And we have to, in my opinion, in order to be good stewards, we got to keep it in mind. We got to keep it top of mind. And in some cases, we got to change our mind. All right, so I appreciate you guys. And again, thank you so much. And as always, I just like to ask you, what's your dream?